Hey everyone, Logan Hertz here with Hazeltine LLC. We have back our frequent guest and colleague, Peter Nelson. Peter, how are you doing?
Living the dream, Logan, living the dream.
We are going to talk about a really exciting topic today because Peter made some options available to me that I did not know were available in the insurance world. And I'm really excited to share them with you. I've already had some of my clients do this, and I'll let Peter introduce the topic since he's the one who showed me that this was even possible. And I'm so excited about this. Peter, take it away.
Yeah. So, with one of our fraternal insurance companies, the Catholic Order of Foresters, which has now opened up its membership to non Catholics as well with its limited membership, it has something just so unique. So, this is a term policy for juveniles, and you actually get to choose the length of the term. So, for example, you could have a 10-year term. You could also have a 60-year term. And I know that sounds crazy, but that's absolutely what you can do. As a matter of fact, I believe my son, I have a 55-year term. That's the rates are guaranteed for that period. So this allows us to do planning that not another insurance company that I know of in the United States, and I know just about all of them out there. And Logan, you can attest to this. No one else offers the strategy that we're going to
No.
talk about here.
No, no, no. Not
And by
only
the
th
way, it's even convertible to age 85, which is even crazier. And even if you go past the guaranteed term period, yes, the rates will go up, but you could still technically convert it. And by the way, you could even change the length of the term. So let's hypothetically say you did a 30-year term or a 20-year term, and halfway through you decide, you know what? I want to extend that term without going through underwriting. You can actually do that with this. And that's what makes this term policy so special. Not only is it for juveniles, we can also use that, what I just mentioned, for adults as well. And it's just really special.
Yeah, it's incredible. So, the Catholic Order of Foresters does something that is very unique, which is you can do a convertible term policy on a juvenile. The other carriers, you can do whole life insurance policies on your children, but not a convertible term policy. Why is convertible term so important? Because it protects your child's insurability at the lowest possible cost. Usually, when you're taking out whole life insurance policies on your children, first of all, for any of this, you're going to be limited by how much you have on the parent. So let's start with that. So parents get excited about taking out policies on their children, and they absolutely should, but that's not the place to start. First, you got to cover yourself, and then the amount of coverage you can get on your children is limited by how much you have on yourself. So in this example, you can get maybe half the amount of death benefit that you have on yourself, on your child. So if you want to take out $1 million policy on your child, you have to have 2 million on yourself first. That's important. So yes, this is an exciting topic, but you got to start with yourself first. What you're doing is what's so important that I've talked about before. You are protecting your child's insurability. So important. And I wish every parent would do this for their children because you just never know what might happen to a child's health and they might be locked out and have no options unless you would take out a convert return policy on them when it's very inexpensive because they're so young. And then you have full options to convert it. And the Catholic Order of Foresters, as we'll show you, does have a very competitive whole life product. So that conversion privilege is very important. Some convertible term policies, like we've spoken about before, if it's not convertible to a great product, which most of them are not, then the conversion privilege isn't worth a whole lot. It's worth something still, but not a whole lot. But they have a very competitive whole life product. So I'm going to jump straight into this incredibly unique
And let me
product.
just add something before I forget, Logan. You mentioned ensuring their insurability. We recently had a case. They reached out to us. I think the child was now 3 or 4 years old. They were diagnosed with type 1 diabetes. Okay. Now, we were not able to, we could get some limited coverage for him, but he's going to be rated. Now, maybe when he gets a little bit older, that can change. But if that would have been taken out when they were just a newborn, if they would have done this strategy here, they would have had protection. I've seen this several times over my career that if the coverage would have been taken out as a newborn, So I recommend after the first month or so, we can apply for this coverage. Now, we can do it later on too, but that actually happens. So I just wanted to mention that.
Yep. I had a 2-year-old declined, and I know someone who lost his insurability at age 4. This stuff happens. Why take a chance with your child's insurability? It's not worth it. It's not worth it. Let's take a look at what this would actually look like. So Peter mentioned you can go up to a 60-year convertible term policy, which is amazing.
You can
So if you're someone
technically,
who doesn't believe in whole life insurance at all, you can get your child protected for pretty much their entire working life.
and Logan, technically you can go longer than 60 years. I don't think we've written one past 60 years, but you could technically go longer. It's going to be more expensive, but you could go longer.
So this is a 2-year-old male, Mr. Johnny Smith, and we are going to take out $2 million of convertible term life insurance on him. The premium is $616 annually, and this is a 20-year policy. Again, we could go longer if we wanted to. So what this means is if you see at the end of year 20, the premium goes up.
Hey,
Now, it's not a terrible premium either, right? So notice after year 20, the premium level goes up, but you could keep this policy in force. And of course, as Peter mentioned, while the policy is in force, you could also change the term period. So you could extend it and increase the premium level. But also notice that's not a ridiculous amount of money either. If you wanted to keep the policy in force and convert it at that point, you could. So $617 annually for 20 years for $2 million of term to protect your child's insurability. And this premium is being paid annually. That equates to about $50 a month. $50 a month protects your child's insurability. Let's talk a little bit about the conversion privilege too. I do want to show that the Catholic Order of Foresters does have a competitive whole life product. So I've also showed an example of what a partial conversion might look like. So this is what it would look like if you wanted to convert some of this policy. From this example, we're paying a $12,000 annual premium into a whole life policy on Mr. Johnny Smith. This gets us $1.1 million of death benefit to start. And in year 1, we have $8,000 of cash value. So this is a very competitive policy that could be used for infinite banking type strategies, cash value accumulation. Of course, we can design it however we want.
But Logan, I thought there's no cash value in the first year or two.
That's right. Yeah, the first 3 years, right? The cash value is 0, right?
Right.
We can make it 0 if we want more death benefit.
I
As
couldn't,
you
I
mentioned,
couldn't,
Peter.
I couldn't help myself. Sorry.
Yeah, and as you mentioned, Peter, on a juvenile, that might not be a bad thing to do, an all-base policy, because it's going to be enforced for so long. You'll get more death benefit.
Yeah.
It just depends what we're trying to do. These are very flexible policies we can design. This is just to show that the Catholic Order of Foresters has a competitive whole life product that can be used for cash value accumulation and infinite banking type strategies, should you want to do those sorts of things. So in this example, if we fast forward, let's say to year 20, we've got $345,000 of cash value. We've got a $2.4 million death benefit. So this would be when the child is maybe in college. When we pay this $12,000 premium in year 20, our cash value grows by $25,000. So more than double what you paid in.
Right. So for every dollar that you put in at year 20, in a way, the insurance company is coming in with another dollar. That's not too shabby.
Right. And you could always transfer this policy to your child or to a trust. This is where a trust can be very helpful. When you die or when you decide your child is ready, you can give them this policy. Usually you'll hand ownership over to a trust, and that way these assets are controlled and your son can still benefit from the cash value that's here. It's meant to be for his benefit, but he can't use it just however he wants. He can use it responsibly according to whatever rules you lay out in the trust. This is what the Rockefellers do. This is how they keep their money in the family. You don't need to go to Wells Fargo for a loan. You come to the family bank. We'll loan you the money on generous terms and you'll pay us back. And you're incentivized to pay us back because you know when you pay the family bank back, you're just replenishing your own borrowing ability. You're benefiting from that. Meanwhile, the full capital base keeps earning in a guaranteed tax-free environment.
Yeah. Also, I just want to mention, I ran this against other big mutual companies. Those guarantees on the left-hand side, those are really good contractual guarantees.
Yes.
We would hope that they would never happen, those contractual guarantees, but they're solid.
Correct. We look at year 40 as an example. We're still paying this $12,000 premium, which, by the way, is optional. But you should want to pay a premium. Here in year 40, you pay that $12,000 premium. Your cash value grows by almost $60,000. 5 times what you pay. This is the power of compound interest over time. The most important element in a whole life insurance policy is the passage of time, and that is the huge advantage that a juvenile has, that this policy is going to be enforced for so much longer. It's actually not that the mortality costs are lower, although that's true because you're taking it out on a juvenile. It's more so just a passage of time. The fact that this policy is enforced for so much longer and compound interest has so much longer to work, because a whole life policy on an adult will actually perform better in the early years. But eventually, a juvenile policy will surpass it because it's enforced for so much longer. And you can see we have a $3.7 million death benefit. If you died and your child inherited this policy at age 40, they'd have a nearly $3.8 million death benefit and $1.1 million of cash value. We did this without taking on any market risk or paying any taxes. Or those assets would probably be controlled by a trust, and your son could use it to finance a business, to purchase a home, purchase a car, pay for a wedding. At this point, he might be putting his own children through college, and he's paying for that using this policy.
And at that point, you could always have the dividends pay the premium if you wanted to.
Right. Right. Paying the premium is optional. You should want to pay that premium, but you could take a reduced paid up. If you never wanted to pay another diamond premium, you could do that. As Peter mentioned, you could use the cash value to pay the premiums. You would have options. You could drop down and pay just the base premium. So of this $12,000, only $4,000 is actually a required payment. So that would be another option. We'll get to that in a second, because if you go down to roughly retirement age, if we fast forward just past year 60, actually 65, Johnny Smith is now 68 years old. We're at year 66 in the policy. Notice the premium drops down to $4,000. So just the base premium, you could use this for retirement income. You now have $3.9 million in cash surrender value and a $6.2 million death benefit. This is the power of compound interest over a long period of time. When Johnny pays that $4,000 premium, his cash value is going to grow by $152,000.
Wow.
Compound interest over time. Then if we fast forward to his natural mortality, let's say age 87, he'll have $7.7 million in cash value and $8.8 million in death benefit.
But
Peter, why would every parent want to do this for their child?
Logan, they say that whole life is a horrible investment.
Oh, it's terrible. It's just terrible, isn't it? You can talk to Sebastian Boyer and others where whenever people get set up with those buy, term, and invest the difference strategies, you meet these sad people in their 60s, 70s, and 80s, and it's like, where did the difference go? I saw you had the term policy and you had it enforced for your working life, maybe. Where did the difference go? Nobody actually buys term and invests the difference. Nobody actually says, okay, what would a whole life insurance policy cost? Let's say it's $20,000 for however many millions of death benefit they want. Let me now buy a term policy for $1,000 a year and invest that $19,000 difference in a disciplined manner. Nobody does this. They just buy cheap term because it's cheap, and the difference just goes away. So if you're going to buy cheap term, how about 20-year convertible term on your 2-year-old child? How about that? This is $50 a month that's well spent. because it's protecting your child's insurability. You have the option to convert it. It gives you so much optionality. I love convertible term because it gives you optionality. And convertible term on a juvenile is just amazing. After you've covered yourself, after you cover yourself, but you don't have to put a lot of premiums into a juvenile policy to really make it insane. In this example, we're paying $12,000 a year. I have, and I'm sure you do too, Peter. I have clients who pay $50 a month into a whole life policy. I have one who's, for all of his children, he has whole life policies where the minimum premium is $50 a month, the maximum is $200. And so he started at $15 a month and he scaled it up to $200 a month. And those policies look pretty good over multiple decades.
Yeah, and let's not forget that with the COF whole life, they don't even technically have to have PUAs on there to dump some extra money in there.
Yeah,
Which is,
there's a lot of flexibility in this policy.
they built this on a whole life chassis, but to have the flexibility of a universal life is really what they've done here. This is one of the most brilliantly designed whole life policies on the market. And I know the guys that designed it, and they are brilliant. They get it.
And I just want to repeat something Peter said earlier. The Catholic Order of Foresters is a 501c fraternal organization, which means since they're not an insurance company, they can do some unique things that an insurance carrier might not be able to do. It used to be the case that in order to be a member, you were required to be a Catholic. They have now opened up what they call limited membership to non-Catholics. So if you are not a Catholic, you still potentially could get access to these policies. I'll just say that understand, if you pay premiums, you are supporting a Catholic organization. So just make sure that you're comfortable with that because you now have a limited membership in a Catholic organization. So make sure you're okay with the mission of the Catholic Order of Foresters because that Catholic identity is essential to who they are and what they do. But if you're okay with that, you can still get access to these phenomenal products if you're not a Catholic. You want to talk about limited membership, Peter? What that means?
Yeah. So recently they opened up the membership to non-Catholics, must qualify with one of the criteria. That doesn't seem to be too much of an issue. There are certain things with a limited membership that you could not do. For example, you couldn't run to be on the board of directors at Catholic Order of Foresters or a couple other things. But to be honest, stuff that really wouldn't matter to the average person. And I think another important thing to talk about with a not-for-profit fraternal insurance company like the Catholic Order of Foresters is that you might be concerned about some of these companies out there that even if you're not Catholic, they might be violating some of your values to a certain degree. And I can assure you, I know all the executives at Catholic Order of Foresters. Catholic Order of Foresters actually even handles all of their investments in-house. First of all, they're investing it in a very prudent way, but they're also making sure that they're not putting it into some funky stuff out there, some companies that just don't jive with the values of the Catholic Order of Foresters. And Catholic Order of Foresters has been around since 1883, founded in the basement of a parish in Chicago. And now Catholic Order of Foresters has their headquarters right in Naperville, a suburb of Chicago. They actually talk about how back in the 50s when they built out in Naperville, I think it was just cornfields back then. Here's an order that has no debt. They're a 501c8, like you mentioned. I've been doing business with them since 2021, and I absolutely adore this company. And I know they're going to be there for the long run because you got to remember when you take out a policy with them, you're not just a client, you're a member. You actually belong to something. And their sole purpose as a fraternal insurance company is to take care of the members. It's not taking care of the shareholders or stockholders. It's to take care of the membership. And I think that is just so special.
Yeah. So the message is protect your child's insurability and give him full optionality by taking out convertible term policies on your children. First, get yourself fully insured with convertible term, maybe with the Catholic Order of Foresters or another good mutually held insurance carrier, and then take out convertible term policies on all of your children so that they're all protected and have multiple options. And then when you go to convert, whether that happens now or 10 years from now, they'll have some great options available to them. So convertible term policies on children is doable. And that is an amazing option every parent should be aware of.
Yeah. Let me finish by saying a lot of times we see the parents try to do something good. They might take out a $10,000 whole life policy. Nothing wrong with that. But at the same time, I would argue I would much rather see a 250,000, 500 million, $2 million convertible term on that juvenile than that really small whole life. I'd rather see it to where in the future you actually convert it into a much larger whole life policy that I think will give you more bang for your buck in the long run.
Agreed. Peter, thanks so much for your time. We appreciate it. As Peter would say, God bless, Godspeed.